How's it going, everybody? Welcome back to Focus Fire Investor. My name is Jamie. Thank you guys so much for tuning in today. For any of my new subscribers, I wanted to let you guys know what I am doing in my portfolios and what I am doing as an independent investor myself, somebody who manages my own portfolios. I do not pay anybody else to manage my portfolios. I do not pay any money to anybody else that I believe should be going into my own portfolios. So that is what we're doing here. We're going through each of the stocks in this specific vehicle right here, in this specific taxable investing account, which is what I'm showing right in front of you right now, is about a list of 30 stocks that I have been trying to reanalyze right now with this volatile market. I've been getting asked several times in the last few weeks, what are you doing? What are you buying? Are you buying? What are you doing in this stock market? And honestly, that is a very difficult question to answer right now because things just aren't making sense. In the stock market right now, we know how volatile it has been over the last 30 to 45 days. I've been saying this over the past few weeks, how volatile the market is. We had the largest drop in like 22 days for the S&P 500 and the Dow Jones Industrial Average, like in all-time history here. So given how volatile it is right now, it is somewhat difficult to know you are making the right decision. Now, in the last about week and a half, I actually haven't bought anything, but I have been contributing some cash to the Roth IRAs. Beginning of 2020, we set out with the goal to max out our Roth IRAs. I believe it was by July of 2020. Now, I will let you guys know that we have already achieved that goal. We have maxed out my Roth IRA and my wife's Roth IRA by April of 2020. So we have achieved that goal, but we still have some money in the second Roth IRA that I have not deployed yet. So it is just sitting there in the money market account, waiting for an opportunity or something to kind of scream at me saying, hey, Jamie, this is a good valuation. I just want to key in on any of the new subscribers that have tuned into this channel and that are considering subscribing right now, just to give you a little insight on what I am doing as an investor. My name is Jamie. I'm 31 years old. I am achieving FIRE by the age of 41. So that means I am striving to achieve financial independence in order to retire early by the age of 41, so in about 10 years. That being said, we are doing a lot every day and every week in order to get to that end goal. You're not going to retire by 41 without literally planning every step of the way out and achieving those goals along the way. One of those goals, like we just talked about, is being able to max out your Roth IRA, which is a tax-protected account, which when you build some serious wealth out there, taxes are going to be a huge battle that you'll want to plan ahead of time very early like I am doing now. If I click over here on the last quarter for this taxable income portfolio here, we can see it's down around 14%. So given that's almost the beginning of the year, if you go here, it's January 13th up until just this last Friday here, which is almost identical to what the S&P 500 has performed in this first quarter of 2020. Pulling up the S&P 500 here, this is why it is a little confusing to the average investor and probably to almost every investor out there, to be completely honest. When you have some analysts talking about this, economy, this supposed recession could be comparable to the Great Depression, like I just don't see that right now. It is confusing because with everything being shut down in the market, in the economy right now, all the different businesses that are, closing their doors, that have limited revenue coming in, that are possibly on the brink of going out of business. And then we look at the S&P 500 right here at the beginning of the year being at 3257, and now it has bounced back up to 2789. We're talking like around 14% of a decline and already a bounce back. Given the last 2 weeks has been green almost every day, and mind you, if it was green just, a 0.5% or up to 3 or 4%, like why is it green right now? With all of the bad stuff going around the market right now, the economy and the stock market, in my opinion, seem to have a disconnect. They are not in parallel right now with all the things happening, all the bad things happening, people dying, the virus going around, businesses being shut down, major loans going, out, the Fed printing money like it doesn't even matter. It does not match what is happening in the stock market, which is why it is difficult to answer that question that everybody's asking, like, hey, what are you doing right now? Or more importantly, what should I be doing? And to be completely honest, right now, I'm doing nothing as far as dispersing money into the economy, into my portfolio right now. I'm doing nothing. I'm just sitting a little stagnant and kind of waiting for a little bit of stability to come into the economy. To be completely honest, what I am doing as an investor right now is, one, watching my expenses expenses, but 2, getting cash ready on the side. I think that is a huge thing to apply to your patience with being an individual investor here, is to have cash ready so when the opportunity does come available, you are ready. You are not saying, well, the market is showing me opportunities right now, but I'm waiting on the next paycheck and the next paycheck. To have that money sitting on the side, to have cash stacked and piled and ready to go and deploy, I think that is huge right now, which is kind of the stance that I'm taking, is I'm getting cash ready right now. Given 2 to 3 weeks ago, the market and the economy looked completely different. The stock market specifically was, giving people many opportunities out there to buy, I want to say, specific stocks. And I found a really cool website here, an article from Dorothy Neufeld. I want to give her credit from Visual Capitalist here. She created this pretty cool little chart here saying the hardest hit companies are the beach stocks here. I was like, what's a beach stock? I've never heard of a beach stock, but she pretty much breaks it down: booking, entertainment and live events, airlines, cruise and casino, and hotels. Now, for anybody that's even affiliated with the stock market, you know that these are some of the seriously hit companies and sectors in the stock market over the last 30 to 60 days here, given what's going around the world right now. So this is pretty cool because it shows you the market cap, how big it used to be, and since recent times, how much it has shrank. And some of these numbers are pretty astounding here. Looking at something like Disney, how big of a company they are, but when you think about how their different revenues break down, they've got hotels, theme parks. I mean, they're pretty much almost invested into the majority of the beach, B-E-A-C-H that is. You can see their market cap went from 255 billion down to 177 billion. I mean, we're talking about a considerable percentage down there. And when we start scrolling down, she shows you a majority of the larger companies in these sectors that have been just crushed as far as market cap goes. You can see some of these companies have almost been halved for their market cap. And when you look at that, and then you compare it to something like the S&P 500, which holds, a good amount of the companies that we're going over here, it just doesn't really make sense when you're looking at, a 14% drop. And somebody says, oh, it's going to be comparable to the Great Depression. What are you talking about? Because I'm just not seeing it. It's not adding up for me when I see the market green over the last week and a half to 2 weeks. It's not matching what I am seeing from an index perspective. If somebody wanted to look and see what are the stocks that are down the most in this market, what are the sectors or areas that I could possibly invest in that have been hit the hardest, these stocks might be one you could possibly look into. But guys, do this with caution, because these stocks that are down right now are also potential stocks that could possibly go out of business. These are the stocks that I'm saying right now, sure, they are on super discount. You can see their market caps have dropped by some of these companies over half, over 50 to 60%. Their market cap has dropped. Their share price has dropped somewhere in the 70 to 80%, depending on which sector you're looking at. Some of these companies are taking out some massive debt and are getting very creative in their different ways, trying to weather this massive storm, which we might just be entering right now. So again, take it with caution if you're going to look at any of these quote unquote beach stocks as possible investments, and I would say limit those in your portfolio to a smaller percentage if they're going to be the more cyclical growth type that you're going for. Sure, you could see anywhere from 3 to 5x in the next 1 to 3 years here, but again guys, take it with a grain of salt. Do not put all of your eggs in one of these baskets here or into one of these stocks here. These stocks are in consideration for going out of business if they cannot weather the storm. I mean, look at this one, a very popular stock right now, Carnival Cruise Line, bottom left of your screen. This has been a very talked about, very invested in. The number of shares that have been bought over the last month have just, exponentially increased here. But when you see their market cap go from 30 billion down to 10 billion as of recent here, it is completely crazy. And if you are to invest in that, like you guys know, I've put a couple tranches in Carnival Cruise Line here, but again, it is a very small portion of my overall paper assets and of my overall net worth. We're talking about just a few percent at max there. So given that, sure, it is on super sale. Again, we don't know what's going to come in the market in the coming weeks, coming months, and in the future years here. But if you do have belief in one of these stocks that they can weather the storm, that they can recover, make it back to 50 to 70% of the stock price that they had in the last year, then maybe these are possible buys for you. But just to show you guys how these different sectors are just getting crushed right now, it is just the start of this, from what it seems like. But what am I doing as an investor? I'm going through all those 30 stocks, and as of recent, 38 stocks that I had in my portfolio. I'm going to go and I'm going to show you guys how I've been breaking it down as far as the dividend payers and what I am looking at keeping and what I am contemplating getting rid of. So anybody that's been following my old channel and is invested in my new channel now, thank you so much for subscribing. I appreciate it if you guys would like this video or if you find any usefulness out of the content that I'm providing here. So I'm down to around 30 positions in this portfolio. I've been telling you guys that I want to lower the amount of positions that I hold in here so that I can give them more attention and pretty much just concentrate on them more, and I don't have to do as much research or upkeep on the amount of positions that I hold in here overall. So what I've been doing today, I spent probably the last hour, and I've been going through all the positions, and I was kind of curious, hey, how many dividend challengers do I hold, which is 5 to 9 years of consecutive dividend increases? How many dividend contenders does this portfolio hold, which is 10 to 24 years of consecutive dividend increases? How many dividend aristocrats do I hold in this portfolio, which is 25 or more years of consecutive increases, and they're also a part of the S&P 500. And then on top of that, the best of the best, which of them are dividend kings, and how many dividend kings do I hold in this portfolio? So I will show you guys here on this little quick easy spreadsheet that I've made how many of each I have and how many years they have been growing their dividend for. So here is a quick view on the dividend kings, aristocrats, contenders, and challengers out of the 30 stocks that I own in my passive income taxable portfolio that you've been looking at here. So showing you guys that there are about 4 dividend kings that I own right now, being J&J, 3M, Altria, and Procter & Gamble. They have some pretty considerable amount of years that they've consecutively been growing their dividend for. Now, for any of my newer investors, anybody that's looking to get into dividend investing, possibly you've been a 401k investor for a long time and you're considering you want to be a dividend investor for that passive income from the stock market. This is one of the great starting points to picking dividend stocks to go into your portfolio, but this is definitely not the only metric that you want to use. To be completely honest, guys, what I am looking at as an investor in 2020 right now, I'm looking 10 years ahead of time when I'm possibly going to pull upon the dividends from this portfolio as income. What I'm wanting right now and what I'm wanting 10 years from now is stability in the dividends through down times like right now. So when you talk about 2020, when you talk about 2008, when you talk about the year 2000, and I talk about all these times where the market is unstable, when we possibly are going through a recession, these are the times where I want stability in the income that I'm going to be very reliant on. So when I'm looking at dividend kings and aristocrats, right there, that's showing me multiple recessions where these companies have weathered the storm. Whether their share price goes down or not, they have continued to pay out an increasing dividend to you, the investor, in the form of passive income. Scrolling down here, you guys can just check out and see for yourself. Feel free to pause the video anywhere on these different stocks and the number of years that they've been paying out dividends here. So looking, there are some pretty impressive numbers here, and majority of the stocks I own have paid a dividend for 8+ years here. So I have a lot of dividend aristocrats, and that's the beauty of being an individual investor here and not investing solely in things just like a 401k or an ETF. You can literally pull up a list of dividend aristocrats. I believe there's like 60 or 70 of them out there, and pick the ones that suit your needs best. So when you come up with your own blueprint and your own statistics that you want to go off of, and you have a minimum baseline that companies need to meet, maybe it's like a 2.5 minimum dividend yields. You want to show a number of the last 5 years on how much they're growing the dividend. Those types of things that you're going to build for yourself, and you're going to run all these companies through a filter like that. You can specifically go out there and pick the dividend stocks that matter to you the most and that meet your criteria. This is a real telling time right now, going through what could possibly be a recession right now. Who knows how long it will take, but these are times to me that are going to speak to me through these specific companies on whether they belong in my portfolio or whether they deserve to have my money, to be quite frank. do they, pay me what I want, a growing dividend every year, and much less do they grow it at a minimum amount that I want to, essentially outpace inflation. Now, if a company doesn't do that, that's a pretty large red flag here. And I've gone ahead and highlighted some of these stocks here. I believe three of them here in red on the stocks I'm probably going to end up cutting out of my portfolio. Now, the first one there, EV, Eaton Vance, that was just 2 years ago part of the dividend aristocrats. They had 37 years of growth, but they have no longer grown their dividend now. I believe just this year they have cut their dividend by 10%. Now you can see that there's two other financial stocks down there, Wells Fargo and Bank of America, WFC and BAC. Those are two other financial stocks that I am currently holding, but I am contemplating rearranging the money in there and just putting it into one financial stock. What I'm honestly considering, guys, is putting the money or the funds that I have in Eaton Vance, Wells Fargo, and Bank of America and just putting it into Chase, just holding one financial stock. And to be completely honest, guys, the bank stocks make me a little scared. I am not a huge fan of that sector of the market, especially given what's happened in 2008 and what is happening right now. With all of the bank stocks just pretty much being almost over leveraged, or just it's more cyclical in my mind. It's more risky of a sector out there, especially given what's expected of them right now in the stock market, with the banks expected to just give out all of these loans and to help out all these other businesses right now. I don't know what's going to happen. Think about all of the businesses, all the banks out there that have the loans for all these mortgages for single consumers, for single family homes, all of those types of loans out there. How many people are going to start defaulting on their loans? How many people are not going to be able to pay their mortgage come 30 to 60 days from now when they're still not working? Those people that had jobs that were paying several $1,000s a week that aren't having that anymore, how many of those people are not going to be able to pay their mortgage? Well, who's going to take the effect and the downside of that? And I think it's going to be these banks. So this is another reason why I'm contemplating, dependent on how the next 3 to 12 months goes, maybe not even holding any financial sector at all in this portfolio. Do I feel like that's something I have to have in this portfolio? I definitely do not feel like I have to have a bank type of stock in here. But again, if Chase, which is what I'm planning on doing, can hold that dividend and not decrease it or get rid of it, then I will consider holding a Chase for the long run here. Now, I'm not expecting them to probably raise their dividend over the next 12 months, which is not a big deal to me as long as they don't cut it or reduce it. If they can keep the same amount of dividend, then for me, 10 years from now, that means that this type of stock, this, Chase essentially, are going to keep the same income coming into my portfolio and into my pocket. So that's one of the things I'm looking at, guys, here is the stability of the income that this portfolio is going to produce. Because when times get scary, when the stock market gets crazy, and when the economy, when something like this happens and it affects literally the global economy, I want to know that my income is secure. I think there's nothing else that can be more scary to an investor or to anybody in general than losing your job or losing your income. When you're talking about sleeping well at night, you're talking about having enough money and having stable income to where you will be able to have those funds to pay for the roof over your head, put the food on the table, and keep the lights on, essentially. Those are the things that are going to let you sleep well at night, and those are the things to me that really are important from picking stocks that go into this portfolio as a general rule of thumb. So this is what I love about being an individual investor, guys, being able to pick single stocks out there and being able to analyze and review what they're doing as a big company, what their CEOs and executives are doing in the company to support investors like us. Now, don't get me wrong, this is a smaller portfolio compared to our 401ks out there. We have the Roth IRAs, all those types of things. I love every type of vehicle that I'm able to invest in right now, but when I invest in my 401ks and when I invest in ETFs, sometimes I feel a little limited on what I'm able to do in comparison to things like my Roth IRA or this taxable account here. When I can go out there and pick my specific investments that fit my needs, I feel like I have 100% freedom and I am 100% in control of what is going on in my portfolio. So that's what I love about being an independent investor, guys. That's what I love about being an individual stock picker as opposed to just putting it all into one basket and letting somebody else manage it. Both are great ways, but when you have the ability and the opportunity to do both, I think it's not bad if you take advantage of what is offered today in 2020, especially with no commissions, low expense ratios, all of that stuff. Guys, take advantage of what you have at your fingertips and just know what you're putting your hard-earned dollars into. And especially given the uncertain times right now, know how stable your income is right now and how stable it will be 10 years, 20, 30 years from now when you're expected to use it. All right, guys, thank you so much for listening to my rant today. Thank you for sticking around. I appreciate you guys watching this video. Please like this video if you gained any knowledge or insight from it. Subscribe if you haven't. Comment below. I'd love to hear from you guys, and I will see you guys in the next video. Have a great day.